Hi there. Today I wanted to give you some information on what is happening in the housing market nationally year over year, January 2022 to January 2023. And I also wanted to give you some statistics on what is happening in the Jacksonville housing market so far this year. So one of the things that we are seeing right now in the national housing market from January 2022 to January 2023 is there is a significant difference in what is happening with home prices on the west coast of the United States versus the east coast of the United States. House prices are falling in the west coast, not falling, just falling from where they were at their peak in 2021 and 2022, versus on the East Coast, what we're seeing is housing prices are still on the rise. This picture is just a representation of showing where housing prices have increased the most and where they have decreased the most in 2022. And you can see Miami is there with the highest increase, 12%, and out in California, 10.3% decrease and 10.5% decrease. In the 1990s, there were huge run-ups in housing prices on the West Coast in areas where there were tech companies. But actually now in the last year, these same cities have actually had the greatest price reductions. San Jose, California, and San Francisco were down in January 10% from a year earlier, and Seattle fell 7.5%. But on the other hand, the eastern half of the United States, Florida, and other southern markets are attracting companies and jobs. In Orlando, home prices were up in January 9.3% from what they were the year before, and in Miami, they were up 12%. Which is the top increase in all of the metro areas. Now, what's happening is many financial companies moved to Miami in 2021 and 2022, and employees that are still arriving can't find homes. Even in Hartford, Connecticut, and Buffalo, New York, had year-over-year gains of 8%. And it seems that the uptick in interest rates have had very little effect on these same areas. Some economists are saying that we can expect to see prices fall in eastern cities where we have also had big price run-ups, like, for example, Nashville, Tennessee, and Raleigh, North Carolina have had big price run-ups. And as we well know, here in Florida, we've seen big price run-ups also. So some economists are saying that prices will decline in Florida and on the other eastern cities as they have in the West. And we will see. As always, spring is a crucial selling season, and we are very much headed into that right now. In Jacksonville, I know that in the sweet spot of home prices, we are seeing multiple offers again, although not necessarily above asking like we did see before a year ago, 2 years ago. But we are seeing, the demand, buyers coming out, needing to buy, and multiple offers. Mortgage rates fell in December and January, and so everything started to pick up again a little bit, and this is nationwide. And then in February, mortgage rates went up a bit, and we did start to see buyers back away a little bit. So the areas that were hardest hit with the price declines were areas where there had been a huge run-up in prices of homes, particularly California, which has long been the nation's highest priced housing market. In the 2010s, the tech boom generated new high-paying jobs and enormous wealth. And San Francisco home prices rose 112% between January 2012 and January 2020, which outpaced the national 58% gain in that period, which is extraordinary. And this is according to the S&P Dow Jones indices. Also, West Coast markets have had low supply, and that's another reason housing prices go up. Now, when housing prices hit new highs in 2021 and 2022, these markets became even less affordable. For example, in Los Angeles, 63% of the area's median household income would be needed to make a mortgage payment. So that's 63% of your entire household income is needed to make the mortgage payment for the average price home in January. So that is just not very affordable for most people. So price decline is not a bad thing if that does continue to happen, or if we continue to see prices settle down. 7 of the 10 least affordable housing markets were in the West, including San Francisco, Seattle, and Los Angeles. The quickest areas to slow down when mortgage rates rose in 2022 were what are called Zoom towns. These were the metro areas that experienced the rapid population growth during the pandemic because remote workers and retirees moved to those lower cost housing markets. These are housing markets in cities such as Boise, Idaho, Phoenix, and Austin. Last year, nearly almost all of the overvalued housing markets were west of the Mississippi River. In January of 2022, an analysis from Florida Atlantic University and Florida International University named Boise, Austin, and Ogden, Utah as the most overvalued housing markets in the U.S. 8 of the top 10 most overvalued markets that month were in the West, Mountain West, or Texas. And what they mean by overvalued is those have been the ones that have risen in value the fastest. This year, some of the prices that have risen the most we have seen further east. So this economists are saying could be a sign that we will see a drop in housing prices. So in January of 2023, this analysis found that Atlanta, Cape Coral, Florida, Charlotte, and North Carolina were the most overvalued. And again, that's based on how far prices have risen above their long-term pricing trends. And the top 10 were all in the South and the Midwest. So markets are overpriced, but they're not as overpriced as they were a year ago. Now, I made a video about this last month, and even though, houses are overpriced, the problem is we still do not have the problem with the houses being overpriced. And the problem with that is that it makes it difficult for somebody to purchase a house. They're not affordable. And then when interest rates going up, having a house is not, or buying a house is just not affordable. When it costs over half of your income to pay for your house, that's not considered to be affordable. And but one of the things that is keeping housing prices up is that we just have low inventory. There just aren't enough houses for the people that want to buy them, and that continues to be the case. So why do we have low inventory? Well, home builders were hampered by supply chain issues and labor shortages during and immediately after the pandemic. Most homeowners with mortgages have a current rate below 4%. I know we do in this house I'm sitting in this video. And nobody wants to give up their current rate to pay for a higher rate for a different house. That is, make sure when you have a higher interest rate, obviously your payment goes up, so you can actually afford less house. You can afford more house, considerably more house, when the interest rates are low. So another reason is homeowners have a lot of equity in their house. Our house, the value of it since pre-pandemic has gone up, not 50%, but close to it, or it has gone up 50%, almost 100% of what we paid for it. That is if somebody wanted to buy it. But anyway, that's quite a bit of equity, more equity than we had in the house that we lived in for 14 years before we bought this one. And that's pretty remarkable. So again, I pointed this out in the video in February that we will not, because of this, we won't see a big wave of foreclosures or distressed sales. And I'll refer you to that video to, I'll post it here and also in the description. Go back and look at that video and you can see the actual numbers of foreclosures that we had back in from 2008 to 2010 based on what's happening now. And it's just it's nowhere near what we saw back then. So some people say housing prices are absolutely not going to drop because we just have too little inventory. And with that being the case, there's just no reason for housing prices to drop. Now, like I said in February, last month, February 2023, Who knows whether housing prices will drop or not? Nobody knows that for sure. I'm just telling you what the trends are, and these are the trends. These are the national trends. Now I'm going. This slide shows the 10 markets with the biggest home price increase between February 2020 and January 23. Topping the list, Tampa, Florida at 59%, and then goes down to, there's Jacksonville, 50%, and we have Phoenix at 47%. The source for this is Black Knight Home Price Index and the Wall Street Journal.